Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 30th of June, 2016. This is another Trader Bite. And yes, the stream will be good today. We're on fiber today. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall picture from the overnight, the key news today is going to be was the Fed stress tests. Two banks have failed the stress tests: Deutsche Bank Trust Corp and Santander, both European banks. The rest of the infrastructure has passed, and as a result, banks have started to, after passing the Dodd-Frank stress tests, banks have started to announce their stock buyback plans. JP Morgan will be buying back $10.6 billion worth of its stock. Citi and Bank of America will buy back 8.6 billion and 5 billion worth of shares. Goldman Sachs will also buy back shares, but has not disclosed the amount. So these banks are gunning for using up that extra cash. And then other than that, really, we're one of the key elements to note for today is that today is the end of June, is the last day of June, and also it is the last day of the first half of the year of Q2. So historically, traditionally, uh, a day like today has a pretty interesting close. So I would be cautious on the close. You might see some really strong movement, especially in the Russell, also across all the indices. But today is the last day of the second quarter and the first half of the year. There's likely to be some window dressing going into the close, so be cautious. Eurozone CPI came in at 0.1% year over year from negative 0.1 in May. That's good news. The euro market rallied on the open last night. Also, the UK GDP came in at zero point 0.4 in line. Um, British pound recovering nicely. And then the Central Bank of the Republic of China and Taiwan lowered its key interest rate for a fourth straight meeting. It cut about 125, 12 and a half basis points. And then that's pretty much it on the news. As far as what was just released, we just got jobless claims about a half hour ago. Came in at 268,000 versus 267,000 expected, so just a thousand more than expected. Continuing claims 2.12 versus 2.15, so slightly better. And then looking ahead at what's on deck for today, we're looking for Chicago PMI to come out at 8:42, 8:45 Central, 9:45 Eastern. But as always, I want to remind you this is a privately released number for subscribers, and it usually comes out much earlier than that, usually around 8:42 or 9:42 Eastern. And then we get the rumor, we see the number come out, and then the number actually comes out, and then we get a move. And this is generally a number that moves the markets. At 9:30 Central, 10:30 Eastern, we're looking for natural gas, expecting 45. And as far as speakers, we have BOE Speaker Carney speaking at the Bank of England at 10 Central, 11 Eastern, and Fed Speaker Bullard also speaking in London at 12:30 Central, 1:30 Eastern. That's what's on deck for today. Let's have a quick look at our charts, but let's start with what was expected yesterday. This is yesterday's Trader Bite here in our morning review as we do every day. The expectation yesterday was for a sideways open. Why? Because we are in this high volume area up here, the composite high volume area. Expected it. I expected it. The better probability play out was for an attempt higher to find sellers and then to start rotating to the prior day's range, top of the prior day's range at 2029. That did not happen. That hypothesis did not work out. Although it looked good at the start, it looked weak. We put in a weak bottom, but the market ended up consolidating and taking off as we saw it turn into a trend day. The secondary hypothesis, again, a choppy open as we open in this high volume area. And then I was looking for a test down and then an attempt up and then expected it to balance out for the rest of the day. That didn't happen either. We actually played out my hypo 4, not even 3. We played out hypo 4, which is to open small test and then start moving back up towards the gap zone, and that's what we did. I don't bother getting into hypos 3 and 4 and so forth. They play out so seldomly. So here's how things look like. Well, let's look at the trigger chart just to see how the day started. So you can see here an open auction, swing up, swing down, back to the middle. The open gets crossed, and then it's lingering at the low and looking weak. I was looking for it to start falling through, either on hypo 1 or hypo 2, didn't care which. But it just kept leaning up against the CVPOC at 2042, and then it just found a base and it started to drift up. And it noticed the mid never gets tested through the whole session. The mid is just not tested at all. Neither is the RTH VWAP. That shows you that the buying was pretty strong. The underlying market, looking at the underlying issues, the pressure is very high on the buy side. We got two instances right here and right here where we saw some selling pressure, but it was very, very temporary. Days like yesterday, one of the key things I learned when I was learning to be a trader, especially when I moved from equity scalping, heavy equity scalping to futures. One of the things I was taught early on is know your weaknesses. Your weaknesses are where you get the highest losses and where your highest expense is. It's not your commission, it's not your software. Your weaknesses are your highest cost is your inability to either identify or accept your weaknesses and therefore to fight the market at the worst possible time. My weakness is this type of day here. I am not good at trading a trend day type like this. I'm much better at trading a market that is rotating in both directions, even if it has somewhat of a skew. A market that is doing this with a skew is tradable. And the good news is that the market historically, and again, past performance not indicative of future results, the market historically trends approximately 18%, at least the ES does, approximately 18% of all days tested on a very large sample qualify as trend days. Yesterday was a trend day. This value area does not really exist. The market closed at the top. We did not move the point of control to the top, which is another feature we like to see. In a trend day, we have exceeded double the IB. So double the IB high is 2060 quarter, so we've exceeded that, so we've hit that mark. We're closing in the top quartile. The IB was not broken on both sides, so it's not neutral. So yesterday was a classic trend day. What was interesting about yesterday is that the delta never really pushed to high numbers. We want to see, recently the delta has not pushed to the high side sustainably in a long time. On a trend day, generally up, we get about 38,000 positive delta. On a trend day down, we get approximately negative 40,000. And lately, we see, even though the prices are trending up, we see delta just crisscrossing the zero line, which is very interesting. It's telling us that the market's rising. Prices are rising with selling pressure, or they're rising on offers being pulled rather than offers being lifted by the buyers. In other words, if buyers were aggressively buying the offer and the offer was in place, we would see that the delta is consistently rising. But what we get here is that price rises without very much of a delta. So that's the synopsis yesterday. In a bigger picture, when we look at the overall where we have breached into the gap zone. This is the gap zone here. Let me clean up this chart a little bit. We have breached into the gap zone. This gap zone here exists between Thursday and Friday of last week on the Brexit vote. We had a close way up here at 2106, and then the market gap down at the high. See, the high of the day here on Friday is the open, and so we had a trend day down. We didn't really have a trend day down. We had a down day. The 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 range was wide, but it didn't qualify as a trend day down. But in any case, we're back and we are attacking the gap zone that was left behind. The mid of the gap zone is 2076.75. The overnight high is approximately, what's the overnight high here? 2073.75 is the overnight high. Got pretty close to the mid of the gap. We are essentially canceling out. We're returning to the scene of the crime on that Brexit news. The market's calming down. The uncertainty and fears is stepping out of the way. As I said yesterday, it is probably not going to be till at least 2019 before we see Britain out of the euro, given that they've decided that they're going to run some elections and elect a new prime minister in the UK before invoking Article 50 of the Lisbon Treaty. So you're looking at probably 3 years out before the effects of the EU hit Britain. And so the market's happy with that. Less uncertainty, money can get back to work and go into risk. Looking at the overall market stance, we have a mixed bag. Crude oil being down 2%, trading at 48.83, with gold right behind it down 0.35. But the rest of the market on the upside is only marginally up. The British pound is just slightly down. The Nasdaq's only up a point and a half. The Dow up 11 points. That's 0.06. The S&P 0.07. So very, very little going on. The expectation for today is that it is likely to be a fairly choppy session. We are, again, trading in the gap zone. Looking at the big picture, here's the big picture. What I want to do is pull in this profile just so that we can see where we are in the overall picture. We left a gap zone yesterday right below us. Again, we just keep leaving a lot of gaps everywhere we go. We still have a gap zone above us from way up here to down here. But we got, in the overnight, we got to this composite low volume node. We had pushed through the lower composite low volume node, and we are basically on the edge. And there's a strong pull for coming back and revisiting this 42. So what I'm looking for today is essentially we're pushing into this composite low volume node and in the gap zone. What I'm looking for is a continuation of yesterday, an attempt to continue yesterday, failing, and then pulling back. That's what I'm looking for on Hypo 1. So if we look at the overnight session, just to put all the pieces together, remember our job here is to put the puzzle together so we can trade on the best possible probability we have based on the history that we've seen so far. How is the story unfolding and what is most likely to happen? That is the goal of the assessment on the auction every morning. And so you can see here, we rallied on the European Open and we've pulled back and we are stuck in the middle. The profile is somewhat balanced. It seems incomplete to the high side. We have the strong push up on the reopen, but overall it's a fairly balanced profile. The market is likely to push through and test yesterday's high to continue yesterday's move. Remember, yesterday's move got terminated by time rather than the auction finding its sellers. So we're likely this morning, we're likely to push to open. Let's scoot this back here. We're likely to open. We're likely to push higher, exhaust the buying, find sellers, and I'm looking for a rotation down. I'm looking for a choppy day today. Why am I looking for the rotation down? Again, we're against the low volume node up here. We're in the gap zone we left behind on Brexit. We generally don't fill the gap zone in one run unless there's news. Looking for the half gap as a target to the upside, so 76.75, looking for resistance there. But overall, looking for a rotation back into yesterday's range as the primary hypothesis for the auction to continue higher after a gap up. Again, news trumps all of this. There is no orderly auction if there's news. But we have to go on a presumption. I cannot predict what is going to be said by some politician somewhere, so I have to go on a presumption that the auction is going to continue proceed normally until news hits. That's why I have two news feeds. That's why I have a news squawk, and I'm very attentive to what's being said out there because it changes things. The market revalues what's being said, especially if it involves central banks. So overall, I'm looking for the market to push up. Try to continue yesterday's trend, and I'm looking for failure. I'm looking for sellers to step in. We have a gap zone below, so I'm looking for an attraction back to 42. I don't know if it'll hit 42 today. That would be my extended target. It's always going to be my extended target because it is the composite point of control, the most important price in the area, the most valuable price in the area. And so, but overall, I'm looking for it to fall back into the range and then for the market to get fairly choppy into the afternoon until the close. Again, June 30th, end of second quarter, end of first half. The rebalance on the close could be quite aggressive. I would not hold on to anything into the close and fight the market on a day like today. Okay, even though tomorrow is July 1st, the first Friday of the month, we do not have non-farm payrolls tomorrow, so we don't have that effect into the close. Non-farm payrolls occur next Friday, and I want to remind everyone that Monday is the 4th of July. It is a U.S. national holiday. It's Independence Day. So look for a market that is likely to go into a grinding halt right after the European close, and to trade sideways and choppy as traders rush out for the holidays. Monday, the markets are open until the equity markets futures are open till noon Central, 1 Eastern, and then they go into a halt and then they reopen at 5 as usual Central Time. So that's hypo 1. Hypo 2 is the is a very is a very the very continuation of yesterday's trend. Open, test lower, possibly the point of control, and then start to walk its way up into the gap zone, looking for 76.75. If it tests lower, looking for 76.75, that gives us about 15 points of range to the upside. That's hypo 2. And the reason for this is that if we start to pull back, down, then it's likely to seek buyers again, and buyers have been active since Monday, and it's likely to find them. And if it doesn't, it gets out of. I know we're in hypo 2 is if it dips into the prior day's range and then comes back out. Then I know that I need to trade from the long side, and I know my target 76.75. Extended target is the top of the gap zone around 20.89. So that's how things are shaping up. I want to remind everyone that there is an AMA today at 4:30 Eastern. The link to it is at the bottom of this video. If you go into the description of the video, you will see that there is a link to today's AMA. You don't have to attend, but if you register, then you will get sent the recording. It'll also be posted on Twitter. The link also posted on Twitter under my handle, as you see it there, twitter.com futurestrader71. So I'll catch you there. I'll catch you at 4:30 Eastern this afternoon. Until then, trade safely. Watch your risk. Take care.